Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We hope to have Peter Leides on. He's a little busy right now. Hopefully he'll be with us before the end of the show here. He has a huge following, folks, but let's talk a little bit about these three stocks that we've been talking about here for weeks, because the first one is Amazon. And as you can see here, the huge ABCD pattern that measured down here to 81, and the low was 81.26. We've now rallied more than $11 here, which is about 12% in a matter of 8 or 9 days. We've almost equaled the same rally that we had back here way back in, October. Excuse me, that was back in October. So we're getting very close to a 382 retracement of that move over here. Now, this is a huge ABCD, folks. It took 6 months to complete, and it was perfect in time and price. And if you look really closely, you can see in yellow the butterfly pattern that was also telling you that that number that we were looking at came in at the level of 81.5. And I believe the low was 81.23. It was within a penny or two of the exact number. And then, of course, it turned up. It might have been a coincidence, maybe or maybe not. That I don't know. I would like to answer a question. I've had a couple of critics here the last few days because I talked about the cycles that were out there and stuff. Folks, I've looked at that cycle stuff, and sometimes it works, sometimes it doesn't, just like ABCD pattern. But the one thing that I can hang my hat on is the ABCD pattern, because it's been around for a very, very long time. You don't have to be a rocket science and have a lot of computer programming and algorithmic stuff like that. You just got to be able to draw a line from A to B and B to C and measure the distance between A and B and C and D. And if it lines up, you have a market that is squared with price and time. And that's really where I like to be, is when I can see that. And it's going to be just as accurate as just any other, folks. You're never going to get to be 100%. If you think it's a 100% game, do yourself a favor and go into art or something like that, because this is not a 100% game. This game is based on probabilities, and you got to keep on swinging. Like, Wayne Gretzky says, you miss 100% of the shots that you don't take. Now, this was Amazon that we were looking at, folks. Now, we were watching three stocks, if you remember, because they all had very similar patterns. And we'll look at this one right here that's been in the news every day forever, and that is Apple. We're going to get up here. Now, this is a long-term weekly cycle in Apple, and this is why we said it was so important. And if you've been listening to the show here, we've gone through this before, but you can see the big ABCD completed right here. And that was at the 382 retracement of the low that we made way back when we had a different president. That's how far back that went, folks. And that was an ABCD, and that's the first big one that we've had during this whole up move. So this was a very powerful thing. Now, that number came in at 125, and the low was 124 7/8. The high today, I believe, is 133 and change, so it's not up a lot. But Tim Cook decided to take a 60% haircut. He's only going to get 40% of the $45 million that he usually gets every year. He's going to be able to eat out a few times a week, folks, with the money that he has. But the importance of this pattern that we're looking at in all of these just can't be underestimated, because if we go below those, that's going to be something that is going to be really, really important, because that means that's a nesting of lows. And by golly, we finally got technical things out of the way, and we've got Peter Leides from Stock Market Cycles on the line. Peter, how are you doing today?
I'm doing just great, Larry. How are you?
I'm very good. Peter, I heard something yesterday, and I had to defend you, and they said Peter Eliades was the perennial bull. Peter, I remember you way back in the 60s when you were doing the charts on the Torah that you had, for all those years, and you were bullish for years and years and years. I mean, I can remember that vividly because you were on FNN, KWHY in TV all the time, always talking about that. So they're giving you.
But you just made a slip of the tongue, Larry, because you said they told you Peter Eliades was a perennial bull. You mean they told you he was a perennial? Yeah,
yes, they said you were a perennial bear. That was a slip of the tongue. That's an old age slip. So anyway, it's with all the stuff that's going on in the world, you could pick any direction you want. You'd probably be right. Now, you've got your first chart here that is about the VIX Index, and I know very little about it. And so if you want to tell the folks what you're looking at here on this VIX Index.
Okay, this has been an incredibly consistent pattern, Larry, that I discovered in looking and comparing the VIX Index with the S&P. The VIX Index, for those that aren't acquainted with it, is a volatility index. It's a pretty good sentiment indicator. When readings are really low, most people are not concerned with a big move down in the markets. When the readings are very high, above 30, those tend to be in the areas of market bottoms. So what I did was I looked at the history of the VIX Index only in bear markets. It's very important to make that distinction because the numbers that I'm about to show you and talk about on the chart only relate to bull markets. Don't have someone come back to me and say, oh, I looked at your numbers, they don't work at all. They don't. That's absolutely right. They will not work in a bull market. But I'm considering this to be a bear market, and any time the VIX Index, that there are two distinct horizontal lines there. One of them is blue and one of them is red, and that's the magical area in a bear market, Larry. When volatility index gets down to those levels, especially the red level, if it gets down to that, invariably you have been in a topping formation, either just about to top or having just topped in a bear market. And I've got some numbers on there. Can you see the numbers there?
Yes, I can see them clearly. Yeah, it comes out very, very nicely, yes.
Okay, it starts out with the top of the bull market for the S&P. That first number one spans from somewhere in the end of December to around the middle of January, with the all-time high right smack in the middle of that red zone on January 3rd on the S&P, with a close of 47.96 and change. So we and if you look above at the VIX Index readings, you'll see that it was right in that zone that I'm talking about, a reading below. I think the blue line is at 20.58, and the red line that you see is around high 18s, 18 or 19, okay? So that's the magical zone for the VIX Index and the S&P. Now...
Oh, Peter, we have to pay a few bills. Can you stay with us, please?
Okay.
We'll be right back with Peter Eliades, folks.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar, yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, with Peter Elides, Stock Market Cycles, and he's talking to us about the VIX Index, and you want to continue, Peter?
Yeah, sure. Looking at the chart that we were looking at, Larry, I've got numbers there. Some of them are accompanied by red rectangles. Those are zones during which the VIX Index was in the area I'm talking about, around that blue and red line, in between the blue and red lines. And some of them are just single-day readings. Like number 2, for example, is a single-day reading, but look where it occurred. If you look at above,
sure did.
Above is the VIX Index, below is the close of the S&P. It occurred exactly at an S&P high close. Then if we go to the number 3, you'll see the red rectangle, again, right in the area of a topping zone. Number 4 is exactly at a high again. Go to number... Now, it's interesting because from the whole period from April 20th of last year, of 2022, into the August 16th high, there was no reading in the VIX Index. Look at that chart on the top there, and they didn't get anywhere near the blue and red zone. But sure enough, as we approached the top on August 16th, into the zone once again, and anytime it's in the zone, I put that red rectangle on the S&P, the lower chart. So we saw that topping zone again at 5, and again for a couple of months, from August into actually almost 3 months, going into November. There was a single-day reading there right at a short-term top, and then just about a week later, a more important top that occurred on the end of November, November 30th. Anyway, that's the gist of what those lines stand for. And you see we have an 8, 9, and a 10. Now, yesterday, we closed at one of the lowest readings of the year, which to me means...
The top chart.
It's still the same chart, but it's number 10 way over on the right.
Yes, I see it. Yeah, I see it. Yep, there we go.
Okay. So that to me indicates complete complacency. The lack of fear that there's going to be any great move to the downside. Now, I'm reading some of these sentiment things, and I'm seeing that it seems like there are a lot of bears out there. But this is a real-life situation that we're looking at with the VIX Index, and people are not looking for that big decline to come. The next two charts, Larry, are simply a repeat of this in the bear markets of 2007, 2008. That's chart number 2. I don't know if you want to look at that quickly.
Or go. Yeah, we're going to have it up here in just about 2 seconds, and there it is.
Okay.
Okay.
That's chart number 2. The same patterns there. I put a rectangle, any periods where the VIX Index remained in that zone or lower, and straight lines up and down when we had single-day readings. And it's just amazing. Take a look at these things. There was a period.
Look at the VIX at all. This is really exciting because it's a way of measuring how people are feeling, the sentiment part, correct?
Exactly. It's a very good measure of sentiment, whether it be complacency or fear in the marketplace. And I mean, look how spectacular it's been. I think I'm looking at them. I didn't do a real strong statistical study, but I don't think there's a place there within a bear market. Again, I emphasize that when the VIX Index got into that range, that it rallied more than 2% before a very significant market decline.
Wow!
And if we look at the third chart, it's the same thing all over again in 2000, October of 02 and March of 03. There was kind of a double bottom. But look at the consistency of these readings, especially the single-day ones. I mean, the single-day ones are pretty spectacular. They almost pinpoint market tops.
Well, you were certainly right on that December 13th one because, boy, that spike up there at 41.75 in the S&P didn't last more than a couple of minutes, and boy, it really sold off from that level. And now the ones that we're having now, it seems like the market has been in this really tight trading range here for the past several weeks, ever since we made that high on December the 13th. Here we are a month later, and really we've gone nowhere. We're still quite a bit below that level, which was 41.70. We're trading around 40 even right now. So to me, this is still a bear market. I can't see any reason to think that it isn't. I mean, we've had lower tops. We haven't had lower bottoms yet, but we're certainly having lower tops. Do you agree with that?
100%, yeah. I definitely rate this to be a bear market. I mean, there are some simplistic measures to use for a bear market, like a 200-day moving average or a 100-day moving average. They're both very effective indicators, and I think it's important to remember that the NDX, the NASDAQ 100, tends to lead the market, and so when that's underperforming, that's another time, especially if it does it for a longer period of time, that you can assume that we are in a bear market when the NASDAQ 100 is underperforming, because it tends to underperform in a bear market and to overperform, to do better on a relative strength basis in a bull market. So it's definitely been underperforming here.
Yeah, it certainly has. Peter, I have a request. I don't know if you kept a picture of your chart that you kept all those years that you rolled up in that Torah formation that I always used to call it. Do you ever have a picture of that? How much did it weigh at the very end when you finally stopped doing it? It must have weighed 30 pounds.
Now you broke my train of thought here. What were you're asking? What about? What,
you remember how you used to, when you hand charted all the Dow Jones chart, every day, and then when it started to go up, you had to add pages to it, and you rolled it up into this big thing, like a flagpole that made it look like a Torah. Horowitz and I used to laugh about Rabbi Elides with his charting thing.
People always laughed at that. It was a chart that drew a lot of attention. I mean, very few people got to see that chart, Larry.
I know.
Whenever they did see it, I mean, when I man rolled it across the floor. It literally went, I don't know, 25, 30, 40 feet across the floor.
Oh, easy. Did you keep it? Is it still around somewhere that you could take a picture of it?
I wish that I had. I wish that I had. It would have been a good historical item, you know.
Oh yeah, that's.
But in the process of moving from one home or one office to another, it kind of got lost in the windstorm somewhere.
Sure. How are you doing with the rain up there, Peter? Are you still getting heavy rains?
Very heavy rains. We had heavy rains. They've kind of pulled back now for a few days, but we had some flooding going on and very potentially dangerous conditions.
Yeah. My daughter lives about 60 miles from Lake Cachuma above Santa Barbara, and they got 19 inches in a 4-day period of rain.
That's incredible.
That's
you know,
I know.
I think the equation is every inch of rain equals about 8 to 10 inches of snow.
Yes, that's correct.
So 19 inches of rain, you're talking about 190 inches of snow. That's just incredible.
Well, you know, Mammoth Lakes is totally, you can't get in and out. There's no skiing or nothing. The slopes are closed. The roads are closed. Everything's closed up there. They can't get into the area. It's just the snow.
It's pretty ironic that a snow area closes because of too much snow, right?
That's for sure. Hey, listen, thanks for joining us, my friend, and have you on again soon. But may God bless, and thanks for this great information. We really love it.
Always my pleasure, Larry.
You bet. Thank you. Peter Leides, folks, Stock Market Cycles. We'll be right back. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I posted a chart of Tesla. If you remember, the ABCD on this comes in, and the 786 from the low from 2019. That was before it went to 1100, and then it split 3.5 to 1, I believe. Came in, the 786 came in exactly at 109. Now, on that one day, we moved down to 106, and then we rallied up to 123. Right now, it's trading around 120. That's an important number to look at. There's nothing but negative news coming out on Tesla, and they beat up Mr. Musk every time he, gets a chance to open his mouth or say something. They closed the Twitter place over in Asia. I saw something on Bloomberg about that today. So, who knows what's going to happen with that. The important thing is, folks, those lows that we saw in these stocks, Amazon, Apple, and Tesla, because they're in the news a lot, very, very important. Now, they're saying now that Tesla is a symptom of a company that is going to go tapioca because it's not going to be able to get all of these cars with enough energy and places to fill them up with gas or whatever the electricity thing is. Much like what happened in 1929, there were 2,000 automobile companies in 1929. In 1982, we had 3, General Motors, Chrysler, and Ford. And if you want to figure Ford during those years, it was probably 2 out of 3. Ford used to mean found on road dead is what it used to mean because they had such bad, keep taking care of the cars, the quality control was really bad, but now it's improved and it's much, much better. The thing that I think that's important to bring to your attention here is from my daughter Jill in San Luis Obispo, where they have a very large Tesla electric car. It's all electric cars, not just Tesla. And there's, I think, 50 stalls there. The problem is it's a 1 to 2 hour wait to get in. And then once you're in, it takes a half an hour to 45 minutes to put enough electricity in the car to fill it up. And boy, folks, you stop and think of the millions of cars that are out there and how they're going to get this electricity and all this stuff. These numbers just don't add up very much. And I see the cars on the road, and I know they look pretty cool. You can't hear them or anything like that, but, I just am real skeptical. But, hey, I still don't think microwave ovens are here to stay, and maybe color TVs are, but microwave ovens, I'm not so sure. Anyway, I'm a dinosaur when it comes to this stuff, but that's what I'm watching as I look at some of these things unfolding here today. Now, right now, as we speak, I want to get this chart up because we have copper getting ready to make this huge pattern. I'll get it up here so that you can see. I've been waiting for 3 days to get filled up here at the 423 level. We hit 422 just a minute ago. Someone just posted in there. Tommy just posted that color TV is a fad, folks. When I was in, we didn't have a TV when I was in college. I'm almost embarrassed to say this, but I was a sophomore in high school, and we did not have an indoor toilet when I was a sophomore in high school, folks. That's a long time ago. But, of course, we lived in an area, it was a farming area, but that still didn't make any difference. Anyway, if you could, let's get back to these charts. You don't want to hear what I'm talking about here. Anyway, look at this chart here. You got double, triple, you got a 3 drive to a top pattern, 423. You've got a monster ABCD pattern. You got a 61% retracement off the high at 502. Boy, if this pattern, if it explodes to the upside from here, folks, we could be in a bull market that might last 5 or 6 more years. But if it stops right here, and if it stops right here, that'll be a totally different ballgame. So we got a holiday coming up. So you really want to watch copper up here at this 423 level. The high today has been 422. We still got some more time to go to get up there, but I think that's where it's going. We just hit 1921 on the gold market, and so that's another one that has broken way above the 61% retracement that was at 1900. We sold that at 1900, folks. It had a nice break of about $1,500, and we had our stop at break even, and about 2 hours after the $1,500 profit disappeared, we were stopped out of that, and we've been standing aside in that. And that's the situation where you don't get paid for being wrong, folks. You get paid for being right. And if you see something, do the right thing. And the right thing there was to put your stop at break even on the gold. And I'll do that 100 times in a row because I don't want to try to pick a top. I think a top is there. That's what I want to say. Like at this Copper, 423 at 430, 7 cents away. I'm history. 6 cents. That's 100. Let's see, 6 cents. That's 6 cents. That's $1,200. That's the most I will risk in copper. So that's the pattern they're looking at. This is no different than if you're looking at the Gartley pattern that was down here, way back in December. Look what happened there. It was late October when the market was bottoming right there. Look at beautiful ABCD right there on the bottom. Nothing wrong with that. I mean, that's a beautiful pattern. Well, these are patterns, and they sometimes they work, sometimes they don't. Getting back to that question about the cycles program, people said, you were bad-mouthing the cycles program because it was curve-fitted. I didn't say it was curve-fitted. I said they looked like they was curve-fitted. Fact is, I emailed Larry Williams because I asked him someone asked me a question about these sophisticated algorithmic programs that they have to find cycles. And I asked Larry, do you use those? And he said, no, I do not. He said, that's over my pay grade. I keep it really simple. Well, maybe he does, maybe he doesn't, but there's nothing over his pay grade because he looks at everything. And so these sophisticated mathematical programs are no different than if you're looking at a regular technical chart. The only advantage of looking at the technical chart is you're looking at the bar charts, okay? You're doing some simple time counts. You're trying to find an ABCD pattern where you have a market that repeats over and over again. And we know that that's for a fact. We've seen it thousands and thousands of times over these past years. And with the computers the way they are, more and more of them are coming out. So that's the edge that I have. That's the edge that I use. And sometimes it works, sometimes it doesn't. And believe me, folks, I'm going to have a period. I've had 3 losses in a row this week, which is unusual, but it's not unusual because I've gone as many as 7 losses. I think that's my most recently. When Mark was here, I had a period where I had, 8 losses in a row, and that was followed with 19 in a row, 19 winning days in a row before I had another losing day. So all I do is just keep doing the patterns, and believe me, folks, when I get out of it, I don't really care. I move on to the next one. I'm not buying a breakout or anything like that. I probably should. Mark tried to get me to do reversal patterns all those years, and he finally threw up his hands and he said, Larry, he said, you're really good at doing one thing, and he said, just do that one thing and you're going to be okay. And I said, Mark, that's what I've been doing. And he said, I'm going to continue doing it. And he laughed and he said, I think I'm going to do the same thing. And that's how he came up with his bond trading system. And all he trades is the ABCDs in the bonds. And when the bonds are running either up or down, he might not get a trade for 2 or 3 weeks. So what did he do? He went in and he traded the euro. And when we come back from this next break, that's the next one we got to watch, folks, because the euro is the inverse of the U.S. dollar, and it is knocking on the door, in my opinion. So we've got to be ready. The markets are closed here on Sunday and Monday. I think Globex will be open because the rest of the world will be open. So I'm pretty sure Globex will still be open Sunday and Monday, but the rest of the markets will be closing. So we come in here Tuesday, you can see some pretty substantial moves, either up or down, and we'll see if that's going to happen or not. We've got to take another break here to pay a few bills, and we'll be right back. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and we're taking a look at the euro. As you can see here by the yellow triangles that are showing the 3 drive to a bottom pattern that we had down into October. You'll notice that this was a perfect ABCD pattern in both price and time. In other words, the time frame between A and B was equal to the time frame between C and D. The price between A and B was equal to C and D. This is what W.D. Gann referred to as the squaring of price and time. And then, after the bottom was completed, oh dear, I think we lost the chart. I hope not. Yep, we did. Just give me a second, folks, and I'll get it back up here. I don't know what I did wrong, but Mr. Al told me to get it back up here, so here it goes. You'll see here, this was the bottom. Then you had the bottom. You see the 135 pattern right here off the bottom, folks? That's what you're looking for. Those are the easiest trades because you're in the direction of the trend. So you had a higher high, and you're having a higher low. That means the trend has changed. All during this time, you had lower tops and lower bottoms. But here it's changed. You have a higher high than here, and you have higher bottoms. So you have a 1, 3, 5, and the ratio between 3 and 5 and the ratio between 1 and 5 are all going to be related to 618 or 786. And then the market starts up. Then it makes its first 38% retracement. Then it makes a 50% retracement. And here's where we were yesterday, setting right there at that 105.60, 108.55 level. Now, the market broke 80 pips today. It's rallied back about 61% so far today. But when we come in this coming weekend, we got to be watching this Sunday night because January has a history of seeing major moves in foreign exchange. Why, I don't know. And we're saying that the chart is out of focus. Let's try to get it up here again so that we'll be able to see it maybe a little bit better this time. And I still have time to cover the next one, which, of course, everybody's been watching, is the natural gas, and I wanted to do that. But anyway, we want to be watching this Sunday night. One of the videos I'll be doing early Sunday will be the area where we're watching for the euro, and then Sunday when it opens, I do another one just to see how the market's reacting to it. There'll be a video also on the copper and also in stocks and bonds and crude oil. Those are the ones that I'll be watching very closely as we come into this weekend. What I'm going to do now is to bring up the chart. Now, this is just a 15-minute chart of the natural gas. And I want to show it to you because it's a way of trying to determine what the trend is, okay? Now, if you'll take a look at this, this is the bottom we were looking at. If you remember, this is when the March contract hit 312. From there, it went to 360 in this AB equals CD move right here. Now, this high right here, I don't show it on this because it's on the hourly, and I don't have the hourly chart for presentation today, but that was the 382 retracement. You notice the market came down overnight, stopped exactly at the 61% retracement right here, and then rallied up to a perfect 382, and then broke down, and then rallied up again to another 382. And now, as you can see here, we're almost ready to take these out. If you'll remember from the cycle program that we showed you yesterday that the natural gas was supposed to bottom this week because it's 7 weeks down between the A leg and 7 weeks down since the C leg. So will they stay at 7 weeks? Maybe it goes to 8, 10, 12. I don't know. All I'm doing now is just doing a simple time count and then measuring these patterns to give me a spot where I can see it's major support or major resistance, or we finally turn the corner. That's all I'm looking for. This morning when I came in, I really thought, because I bought this last night. It looked pretty good, but, when I got here this morning, this had already turned down, and I saw the 382, and I moved my stop up. I didn't go short, but I should have gone short here, but I was doing other things today. But this is one that's got to be on the watch list because it's very active. It's in the news all the time, and now they want to discontinue fireplaces and stuff like that. Well, who knows? Maybe they'll have liquefied natural gas for automobiles. I think they have it for some of these trucks and stuff that are out there anyway. So we'll see if that's going to be the case. The main one that I'm watching, of course, right now, and I have to agree with Peter, we're at a real critical level here because even with all the stuff that we did here in the stock market, we actually didn't do very much. All we did I lose that chart? Yeah, by golly, I did. Son of a gun. All we did in the S&P this week was that high we made at 40.21 the other day. That was nothing more than a 61% retracement almost to the penny from the high that we made at 41.75 back on December 13th when the Federal Reserve came out and said everything is wonderful and good. And you can see what happened to wonderful and good after that. We had one heck of a break. And if Peter's correct, looking at the VIX Index, that maybe it's a sign of sentiment, and we're setting at one of those levels right now at 40.21. If we don't take out 40.21 pretty soon, and watching the NASDAQ is important too, because as Peter mentioned, this market's not going to take much on the upside unless that NASDAQ, starts changing its tune, and then you'll be able to get a better idea of, how these things are going to unfold. By the way, the number of inches, if you have an inch of rain, that is 10 inches of snow, as I recall from my days back in Indiana. So that's a lot of, you stop and think how much snow that really is. But you can't even get in the roads up there. And that they have a lot of snow moving equipment because Mammoth Lakes is a big skiing place. I mean, for Southern California and Northern California, that is huge. On the other side of Mammoth Lakes, and we used to go there all the time because my good friend Dennis Inouye, who was in the pharmacy business when I knew him back in the days of SC and Eli Lilly and stuff. He had a chalet there, a beautiful 3-bedroom Swiss chalet right on the slopes. And we would go up there every winter, and the kids would stay about a week or two. And I never got far away from that fireplace, but everybody else would go out skiing and stuff. And anyway, it's a beautiful place up there. But now they have so much snow they can't even have people come in. That's the worst scenario, folks. When that stuff starts to melt, shut the front door and raise the rent. What I'm trying to get to, on the other side of Mammoth Lakes, if you look at it, is, you guess what, El Capitan and one of the most beautiful places, El Capitan Mountain at Yosemite National Park. It's just absolutely incredible up there. And it's really, really beautiful. And when that rain starts, when that snow starts to melt and comes down out of those mountains, oh my God, it's really majestic. You can see it on YouTube if you pay attention, and some of those things you might want to look at. Okay, one other thing. It's on a personal note. My daughter, my youngest daughter, Laren, She went to the safety deposit box the other day and was going through stuff that I had given over the years. I mean, I'm talking 50, she's 55 now. And I started giving her stuff when she was 5 or 6. We put it away for both of them. And she's got some really nice stuff in there. She said, "What should I do with it?" I said, "Send it to me." She said, "Dad, I'm going to keep it." I said, "Yeah, that's what I want you to do." But she had some really nice gold pieces, and she had some good, nice silver dollars, and some. She has a $1,000 bill with Cleveland's picture on it, and also a $500 bill with McKinley. These are in perfect shape. We got those from the Federal Reserve with Mr. Byron Tucker back in 1983 at the Merc. Hey, we'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the AI forecast for gold for the last 2 hours of the day we're trading here at 1624. Look, 1924. I just got a message from someone that you guys know. Has been my guest before, and he's had a bad week. He's just one of his few times that he's had a bad week. And he said, "What's the best thing I should do?" And I said, "Read 2 pages of Mark's book, Trading in the Zone Every Day. He said, Larry, he said, I've been doing that for 15 years. And I said, yeah, I know you have. I said, but this is just a part of the game, folks. You know, if you won every time, I mean, you'd say, well, maybe I found the Holy Grail, and nobody's got that. So that's really it. It's just putting the probabilities in your favor, and that's what you're trying to do. Nothing more or less than that. Now, on a trade like this, because this is just a 2-minute chart and it's supposed to turn right now, and trading at 16.24, the sale was at 16.24. See, I would not risk more than $3 on that. And the highest so far has been 16.25, but that's mainly what I'm watching here. So whether that means very much or not, you know, still remains to be seen. But that's all I'm doing is just watching things. It's sometimes they work, sometimes they don't. That's basically the bottom line. So you got to remember to do that. Remember, folks, we got a holiday coming up. Globex will be open Sunday and Monday. We'll see you all on Tuesday, of course. And our guest on Tuesday, I think, who did I have on Tuesday? I think maybe it was Mr. The 18th. No, we got Mike Moore is going to be on the 19th for sure. And then we'll have to pay attention. Who else is going to be on next week? I'll get some other folks. We got Stan Harley coming up. And Tim Bost is on the mend. He's doing a little better, but still not anywhere close to even coming back here to work as of yet. But it's getting closer and closer as we go through this stuff each day. So live every day in an attitude of gratitude, and may God bless. Do something nice for your neighbors, folks. They all need help. We'll see you on the flip side on Tuesday.